it is a terrifying prospect, but there's kind of light at the end of the tunnel there. And so I'll kind of walk through what I think the playbook is here. I think in the next couple of months, we see inflation come below 2%. The Federal Reserve starts to run victory laps because they said we did it, we achieved a soft landing, we brought inflation down and didn't cause a recession because they changed the definition of recession earlier this year. And so at that point, then what you have to realize is we still have the most overleveraged economy, global economy in world history, and we just spiked interest rates to higher than they've been in a very long time. We are going to cause defaults from that. We are going to see unintended consequences in financial institutions around the world start to fall over. When we start to see this collapse take place as a result of rates skyrocketing here and having all this leverage, what we are going to see is the central planners, central banks and governments pulling back from the rescue as long as they can possibly wait here. They want to induce maximum pain. Similar reasons to why we haven't seen any regulation in the crypto space for a long time. They want to induce maximum pain there so that when they do come in with the regulations and the new idea for plan, people are begging for more government to be rescued because they can't stand the pain. At the point of maximum pain here, when things are falling to pieces, they're going to say, we can come in, we can save the day. However, we can't do it the same as we did last time. Because last time, if you remember, because of a bunch of different reasons outside of our control, there was inflation that was record high, there were bubbles, and there was fraud. We can save you, but we want to prevent those three things from happening again. The only way that we can do that is with a central bank digital currency. If we use the IRS to send out stimulus checks, you guys are going to go buy up all the gasoline, buy up all the toilet paper, buy up all the food and cause shortages. If we use a CBDC to do this, we can restrict how much people buy and stop the hoarders from causing shortages. If we send out, it's very scary. If we send out the same way we did before, stimulus checks with the IRS, everybody can go buy crypto and everybody can go buy stocks and cause all these bubbles that are going to crash and lose you money. We want to protect you from
these GameStop.
Scams. Or GameStop. Yeah, exactly. We want to protect you from these frauds and these scams. So if we do it with the CBDC, we can restrict how much money can go into brokerage accounts or can be used to purchase various stocks.
But Joe, look, come on. I mean, look at how well it has worked out before when central planners tried to adjust supply and demand. I mean, the Soviet Union was a great example. You know, you only had to wait in line for 18 hours to get a pair of shoes that, you know, would only be doled out once a year, even if whether you needed shoes or not. And when you got your turn to get shoes, your size was gone. So you'd have to trade them with your neighbors. And, you know, people from Eastern Europe have told me these stories like firsthand.
Yeah.
Okay. I've heard these stories. It's not from the news or YouTube or any reading in a book. I talk to people about this directly in Russia and Eastern European countries. So, it's absolutely true and scary to think that they're going to run supply and demand better than a free market will. It's completely ridiculous.
This is what I call the regulatory roller coaster to tyranny. And this is what always happens. You have the Federal Reserve or the central entity, if somebody step in with regulation, it causes a crash. Then you step in with subsidies to rescue everything. And then that causes bubbles and fraud. And then in order to stop the bubbles and fraud, more regulation, then more subsidy bailout, then more regulation. And ultimately you land in tyranny. And this is what they always do and they will do next time. And people will be more than happy to accept the handcuff because it looks like a handout. And when the central bank digital currency is rolled out, that's exactly how they're going to frame it. Yeah.
I just want to remind everybody, and I have pointed this out on the show before, when COVID was in full swing or as it was just ramping up, there were many articles I saw about how the money is dirty and the virus is being passed by people handling the money. And then it was like impossible to get a hold of any coins. And it's still pretty impossible to get a hold of coins. They're just gone from circulation. I mean, try and get some coins. It's, you know, good. See if you can get some quarters, dimes, and nickels, folks. It's unbelievably difficult to get them in any real quantity. And then the next thing they did is when that first round of stimmy checks came out, so they said, okay, don't touch the money, you know, because it's contagious. Right. So they planted that fear. And then when the stimmy checks came out, there were all these stories and articles about how they couldn't find people to give them their money. And, you know, like, oh, the IRS doesn't know where, or the Treasury doesn't know where to send the money. Like, people can't get help. So, they want it to be digital so they can just send it right to your phone, right? They're already planting this in our minds.